ettaka. URA tukulaakulanyize wamu Uganda. Uganda is rich in natural resources and hard-working people.
Morning and welcome to this edition of Tax Mchuzi, where we are understanding VAT. That's the topic we're going to talk about. My name is Josephine Kabiesisa and I'm happy to host this session. I'll also allow our guest to introduce himself.
Good morning, our dear viewers. My name is Jim Kagolo. I'm happy to be part of today's session, Understanding VAT, and I'm glad I'm going to be taking you through the basics of VAT.
All right, thank you. I think this is a timely topic when people are still uneasy about IFRIS. And for those who have followed us for a while now, you know that IFRIS is just a system of collecting VAT, or that helps with the collection of VAT, and not a tax. But let us allow our guest to tell us more about that. So, Jim, what is VAT? In the layman definition, not that complicated tax version.
Okay, thank you. In a layman, I would describe VAT as a tax charged on what I would call taxable goods and services. I'll dissect what is taxable. We all know that not all products are liable to VAT. Some are not, whereas some are liable to VAT. So VAT is only charged when you consume. By consuming, you're actually buying. If you're buying bread, that is when you pay VAT. So not all items are actually liable to VAT. You have some items, like Uganda being an agriculture-based country, most of the unprocessed agricultural products do not attract VAT. The likes of matoke, and I enjoy most, there is no VAT. So when you're buying it, whereas you're consuming, but that item is not taxable. So it is on consumption of items that are classified as taxable in a layman. Yeah.
Okay. Is VAT a new tax?
VAT is not a new tax. VAT was actually introduced in Uganda on 1st July 1996 by Statute of Parliament. But it replaced other tax types we had. We had the commercial transaction levy and the sales tax. So VAT has been on since 1996, and even before 1996, we had a similar tax known as sales tax and commercial transaction levy. Its mode of operation was VAT, only that it had a different name. So VAT is not a new tax. I know it may even be older than the moderator here. So it is not really a new tax.
Okay, I see you've reduced my age. For me, it works in my favor. But who is liable to pay VAT? Again, I would like you to answer this in regard to all that has happened since towards the end of the last financial year, since around March, April to now. We see traders still moving around, fighting, whether they call it IFRIS, whether they call it VAT, take it back to the manufacturers and all that. While you tell us who is liable to pay VAT, can you also account for those dynamics?
Okay, thank you. When we talk of who is liable to pay VAT in terms of the VAT Act, we are looking at a person who actually pays the tax to URA. There are two scenarios: that when I go to the supermarket owner is going to charge me VAT. But in terms of the law, the person who pays the tax is not the person who has bought, but the owner of the supermarket.
Okay. So
I'm going to discuss that in that line, because VAT is both on goods sold locally and goods imported, whereas as well as services. So if a person is a taxable person, that is a person who is registered for VAT, because not everyone charges VAT. It's only a person who is registered. So if a person is registered for VAT and is offering services or selling goods, he is the one liable to to pay VAT to URA. I've already given you an example that if I walk in a supermarket, I pick bread. Bread is taxable, there is VAT at a rate of 18%. But it is not me who is buying, whereas the owner of the supermarket is going to charge me VAT. I am not the one liable to pass on that VAT to URA. It will be the supermarket owner. So when we talk of who is liable, it will be the taxable person, which is the supermarket making the supply of bread. That we are looking at goods that are sold within the boundaries of Uganda. When it comes to an import, like I said, VAT is both on goods sold locally and imported. When it comes to an import, it is the importer who is liable to pay VAT. When it comes to an importer, it does not matter whether you're VAT registered or not, as long as you're importing an item that is taxable. You become liable to pay VAT. So if Josephine, you're importing a car, you choose to import a car tomorrow, even when you're not VAT registered, because the car you're importing is actually taxable, you will be liable to pay the VAT because you are the importer. The issue of whether you're VAT registered or not does not apply when it comes to imports. But like I said, not all items are taxable. So even when you're importing, you will only be liable to pay VAT on items that are taxable. If an item is exempt, even when you're importing it, you will not be liable to pay VAT. So we have another category of imported services. Section 4 of the Act imposes VAT on an import of a service. That you have a car, it is this expensive car, so you fly in a person to do repairs and maintenance for your car. That is an import of a service, because what the person has come to do is a service repair. Okay, it is not a good, so you can call that a service. So then who is liable in that transaction? It is you, Josephine, the recipient of the service, who is liable to pay the VAT on that transaction. Why it was made like that? The person you've brought in is one is not a citizen, not a resident for tax purposes. So tracing the person, it may be hard, but Josephine is a resident in Uganda. So getting Josephine is much more easier than tracing the other person who has just come to deliver service, after which you will just fly and go back. So we have those three categories. It depends what you're dealing in, whether you're importing a good or a service or offering taxable goods locally.
Okay.
Yeah.
All right. The other thing I think I've noted from your submission is who is charged, who bears the burden, and who pays.
They are different.
They are different.
Yes.
Yeah, that's a key thing that I picked out. So who ultimately bears VAT, and how does VAT work?
Okay. Who ultimately bears the tax burden? The final consumer. Me and you. When we go to the supermarket to buy bread, we are the final consumers for that bread. The final consumer, in this case, you're looking at a person who is buying an item for, I should say, home consumption. Okay, you're not going to generate any more value out of that. If I have a retail shop and I buy bread from a bakery, I can't be considered the final consumer because I'm using this bread still to do business. I'm generating more value by selling it to another person. Now me who buys the bread for consumption, taking it to my kids or neighbors to eat, I am considered a final consumer. So I bear the tax burden. Whereas VAT is collected by the different players along the chain of distribution. It is ultimately borne by the final consumer. I think we are going to illustrate that, that if you import goods, but you're not importing for sale, you can even be an importer, but you're a final consumer. The example I gave you is for your car. When you buy a car for you to drive, you're a final consumer. So you're actually paying that tax. But if I am a bond, I import a car for resale, then the bond is not a final consumer. And that is illustrated by the input output tax, like we are going to see in the final, rather in the illustration for the VAT mechanism. So much as VAT is collected by the different players, you will see if an importer imports, there will be VAT at importation. If he sells that to a wholesaler, there will be VAT charged at that stage. Wholesaler to a retailer, there will be VAT at that stage. Retailer to a final consumer, there will be VAT. So we have many people along the chain of distribution charging VAT, but it is ultimately borne by the final consumer. And it is on consumption. You can actually avoid paying VAT if you can. That is by avoiding to consume. Or you can be strategic to only consume goods that are exempt. If you're eating food, you can be like me, just eat only matoke. You forget about the cereals that you enjoy that are actually.
No, but also why I get the matoke matters. I could be eating matoke alone, but eating it in a restaurant.
Oh, okay. When you're eating matoke in a restaurant, the matoke I'm talking about is matoke bought in a raw form. Okay, that is the one that is exempt. Matoke found in a restaurant, well prepared with the meat. That one, it is no longer a unprocessed agricultural product. The process of peeling, cooking it, making it kubobera in Luganda language, you're changing you're transforming the matoke into another nice looking product, another form. So that one becomes standard rated. The one I'm talking about is I'm buying a bunch of matoke
to do the value addition myself.
I take it home, I prepare myself. There is no VAT. But not go to a restaurant and you say, Jim said there is no VAT on matoke. That is in a different form. It is only on unprocessed agricultural products. Even the meat, if you buy it raw, it is unprocessed. Okay? But when you find it well prepared, marinated, the changes, the form has changed. There is VAT.
Okay, because it's a question we get so many times. But why is this value addition? If I've bought the water from the bottled water, if I've bought it from the manufacturer and I've put it, what form, what addition is there? It's a question that we often get. And
I normally ask people, if you've bought a bottle of water, let me say at 500, okay? You have an upcountry, upscale restaurant in those high-end areas, like of Kororo. If you say you've not added value, why are you selling it at 10,000 yet you bought it at 500? What are you basing on to increase the price from 500 to 10,000? It is because you're tagging value to this product, either by the location. Because yes, you'll find in some places, it is person bought it at 500, he's selling it at 600, or another one selling it at 1,000. They are all deriving value by that, adding, increasing the price. So the fact that you're selling it at 10,000 and people are willingly buying it, it means where it is located, they see the value of 10,000 in that one bottle of water. So that is the value addition we are talking about. Value addition doesn't necessarily mean that you're processing, you're changing the form of a product from one to the other. If you import a car from Japan, you haven't done anything on it, but you've added value, you've brought the convenience, you've brought it closer to me. If I walk to a car bond in Banda, it is much convenient than finding it in Japan. So that bringing it closer, you're adding value. Me, I attach more value to a car I see in a bond in Banda than the one I see in Japan. Because in Japan, when I see it, then I start thinking of bringing it here, then in Mombasa, then here. But when I find it in Banda, I am at peace. I know the moment I pay, I am driving. So even when you charge me highly, I am seeing that value. So value addition shouldn't be only looked at in terms of processing or transforming an item from one to the other, as long as the item is taxable. note should be taken, because there are others that even when you transform, you've added value, the item is exempt. Okay, for example, if we all know medical, the medicines we take, okay, I'll use Panadol. You know, Panadol, to make it, they are adding so many things and they are bringing it together. But you can't say that this one also added value. Why are you not charging? Yes, they are not charging it because it is exempt. So when we are looking at value addition, we shouldn't look at it in a lump sum. You're only looking at value added on only taxable goods. If the value is added on an exempt item, then you shouldn't charge VAT. Yes.
All right. So I guess we can get into the illustration so that it is clearer for the people who are watching us to understand how VAT works. Just a moment.
Okay, I hope it is very visible. So I have a simple illustration here. Esther is a VAT registered person. Like we said, not everyone is supposed to be VAT registered. Even when you're selling an item that is VATable, it is threshold based. Okay, so you must first reach a certain threshold in sales for you to qualify. Okay, if you find me selling bread but I'm not VAT registered, I cannot charge VAT even when what I'm selling is ordinarily standard rated. So Esther is VAT registered person, meaning he has to charge and pay tax to URA. Dealing in men's garments. During the month of March 2024, she imported men's garments from China worth 450 million. Immediately on arrival, she sold the entire consignment to Ben at 555 million. Ben sold the same goods to Caroline at 620, 500,000, who later sold all the garments to various customers, all the final consumers, and realized the total sales of UGX 742 million. So in my explanation, I talked about the chain of distribution. Now this question illustrates a chain that Esther is importing. When she imports, she sells to Ben. Ben sells to Caro. Caro sells to the final consumers. So in the chain, you have many participants. It is, you can have one, you can have two, you can have 100 in the chain, depending.
Yeah.
So now, men's garments are standard rated. They are taxable at a rate of 18%. When I say taxable, we have two rates for taxable. We have items that are taxable at a rate of 18%, commonly referred to as standard rated, and we have items that are taxable at a rate of 0%, commonly referred to as zero rated items. The VAT is charged, but it is zero, so you do not have to pay anything. So, looking at this example, Esther imported, but remember we said VAT is charged on goods sold locally and those imported. So when Esther imports men's garments, there is VAT, and we said for imports you have to pay whether you're VAT registered or not. So in this case, Esther is going to be charged VAT of 18%. That is the 450, which is the CIF plus import duty, times 18%. So Esther is going at importation. Before the goods are released to Esther, she has to pay VAT in addition to the other taxes applicable at importation, 81%. million. Esther is going to pay this entire 81 million to URA. So we shall have this in the column of VAT paid to URA. Okay? Now that is one point in the chain of distribution. Because Esther is not a final consumer, he has actually imported these goods to do business. So he is selling it to Ben at a profit. Because Esther is not an NGO that is going to bring goods for 450, just gives them away for free. Okay? She's also here to make a profit. So she's selling the same goods to Ben, okay, at 555 million with a profit. The profit, the Esther is going to charge Ben VAT on the sales amount. So we are going to do 18% times the 555 million. So Esther is going to collect 900,000 from Ben. But Ben is not going to pay this tax to URA. Okay? Ben is going to pay this money to Esther. Remember the example I used, that when I buy bread, whereas they are charging me VAT, I'm not paying it to URA, I'm paying it to the owner of the supermarket. So Ben is paying the VAT of 900,000 to Esther. Okay? Now, in this transaction, this is the only two transactions that Esther had in a month. An import and a sale to Ben. Now, Esther, because Esther is a registered person, Esther is supposed to file a return and pay any tax to URA. Now, the question is, how much does Esther pay to URA? Is it the 81 or the 99? The 81 actually was already paid to URA. So URA already has 81. Okay? Now Esther has charged VAT of 99,900,000. Collected it from Ben.
Yes.
So in Esther's return, Esther is going to say, yes, whereas Ben has given me 99,900,000, but I already gave you 81 million. Okay? So from the 99, first you remove what you already have, the 81 million. So here we are going to get the difference between the 99 that Esther has collected from Ben minus the 81 that Esther paid at importation. So Esther is only going to pay the difference of 18,900,000 to URA. Now this is the input-output tax credit that we are talking about. In simple terms, we can say that Esther is only paying tax on value added. Remember, VAT is paid on value added. Now, in this scenario, we can say the value added is the difference between the purchase price and the selling price. So if we are to illustrate this, the selling price is 555 minus the purchase price, which is the 450. So we have a profit of 105 million. Okay? If we just compute 18%, 18% gives us 18.9 million. If you compare this and this, it's a confirmation that VAT is only paid on value added. On value added on a taxable supply. But it is well illustrated using the input output, or what we commonly refer to as the credit mechanism. That whatever you've collected, you first remove what you paid when you were purchasing. So this is at the level of Esther. Now the goods have been sent to Ben. Ben has bought from Esther. So we have another level along the chain of distribution. Okay. So remember, Ben has already bought at 555 million. So Ben is now selling it to Carol at 620, 500,000. Ben is now going to collect VAT of 18%, which is the selling price times 18%. So he's going to collect VAT of 111,690,000 from Carol. And now Ben is only having these two transactions in a month. So now we need to compute the input and output for Ben. You have the VAT as collected of 111,690,000. But there is the 99 million that Ben gave to Esther. So when Ben is filing a return to URA, he will be like, yes, I've received 111,690,000. But there is the 99 million I gave to Esther. So for me, what I'm supposed to pay is what I've received minus what I paid at the point of purchasing these items. And this is the difference between the VAT from the sales minus the VAT of 99 million that was charged. So whereas Ben collected 111,690,000 from Carol, Ben is not going to pay the entire 111,690,000. Ben is only going to pay the difference between between the 111,690,000 and the 99,900,000. So he's only going to pay the 11. Still, it is on value addition. If you get the difference between the purchase price and the selling price and you do 18%, you would still get the 11.79. A confirmation that VAT is charged on value addition. So we have the next stage, which is the last stage in the chain. Okay. Caroline has bought from Ben, and now Carol is selling it to the final consumers. The gentlemen here who are going to put on the trousers, the shirts, they are not selling to do business. It is for their own consumption. So they are the final consumer. And you can still be a final consumer when you're VAT registered. Okay? I'm assuming I am VAT registered, but I go to a shop, I buy a trouser for myself. That trouser is not a business, it's not business related. It is personal. So it does not form part of the business transactions. So in that perspective, I am a final consumer because what I'm buying is not for business, but rather for personal consumption. So a Carol is selling to the final consumers at a price of 742 million. Okay, and is charging VAT of the selling price times 18% of 133,560,000. But the question is, how much is Carol going to pay to URA? Whereas he has received 133,560,000 from the final consumers, he already paid 111,690,000 to Carol. So in the return that Carol is going to submit to URA, he's going to declare the purchase transaction where he paid the VAT of 111,690,000, and also declare the sales transactions to the various consumers with the VAT of 133,560,000. So Carol is going to pay the difference between the two. In this case, which is the 21, the 133 minus the 11690. So here, Carol is going to pay 21. Only on what is on value added, the input minus output. Now, this is the end of the chain. These are the only stages you have in the chain of distribution. So how do we confirm that the VAT is ultimately borne by the final consumer? Remember, we said a person who pays is the person who remits the tax to URA. So I want us to look at the column where there is tax or VAT paid to URA. You have the 81 that Esther paid when she was importing. You have the 18,900,000 that Esther paid after making a sale to VAT. This was equally paid to URA. We are not looking at the 99,900,000.
Yes.
Whereas Esther received it from Ben. But this money was not paid to URA. So we are not considering it. We are only considering what actually comes to the tax body, which is the 18.9. If we go to the next stage where Ben sold to Carol, Ben filed a return and only paid 11.79 million, the 11,790,000. That is what came to the tax body. When Carol sold to the final consumers, he charged 133, but that's not what he paid to URA. He paid 21,870,000. Now, if we sum up whatever has been paid to URA at the different levels in the stage of distribution, if I can do an auto sum. This is an auto sum. Okay. I hope the viewers are able to see. Maybe let me just add one by one. We add this plus this plus this and plus this, so they can be able to see what we are adding. So it is a summation of all the VAT collected along the chain of distribution, that from the time Esther imported these goods into the country until the time these goods reach the final consumer, VAT of 133,560,000 is paid to URA. Now we are comparing the entire VAT paid along the chain with what the last person in the chain charged the final consumers. Okay?
Yes.
So when you look at what Carol collected, the VAT that Carol collected from the final consumers is 133,560,000. If you compare this with what we've collected, what has gone to URA along the entire chain of distribution, it is a confirmation that the final consumer ultimately bears the tax burden. That whereas you may see, I do not want to use examples for businesses. Okay. Whereas you may see a person is running a business X, okay, and is saying, but I am paying VAT. Yes, you're paying VAT to URA. The question is, are you the one bearing the burden? You're just a collecting agent along the chain of distribution, because it is an indirect tax. It is on consumption. So it is the one who consumes who actually bears the burden. If I have a business, I am selling product Z, I am not the consumer. So it will be the final consumer. The tax will eventually be cascaded down to the final consumer. So the narrative that people put out there, that you see, I pay a lot of VAT. Yes, you're paying and you're liable. In case you're liable and you not pay, you may face penalties here and there. But the question is, are you paying this VAT from your profits? The answer is no. It is not from your profits. You're collecting it from one person. You remove what you were charged when you are buying, pay the difference to URA, not from your profits.
All right, thank you. I think that has been so clear. Much as you've shown us the example from an importer, I think the same applies to the manufacturer.
The same applies to the
Just
manufacturer.
replace that part.
Yes.
The manufacturer, after adding value, charges VAT, and the chain goes on. So I think that has been very clear.
Okay.
So before we get into the questions that are coming from the viewers, I just wanted to know, how can someone register for VAT? Because you keep saying someone is registered, if someone is registered. How can someone register, and under what circumstances? What criteria do they have to meet?
Okay. Before we go to how can one register for VAT, I would like to start with who qualifies to register for VAT. Because like I said, not everyone qualifies to register for VAT. So before you think of registering for VAT, you must first ask yourself, do I qualify to be on VAT? VAT is a turnover-based tax. Okay, a turnover-based tax. It is, we base on the turnover, the sales, to determine whether a person qualifies to be on the register or not. Currently, the threshold is 150 million Uganda shillings in a 12 months period. But you do not have to wait for the 12 months to make the 150 million. It is broken down into a quarterly threshold. We have 4 quarters in a year.
Yeah.
So when you get the 150 million divided by 4, you get 37.5 million. So we have now reduced the threshold to a quarterly threshold. So if you make sales, not profits, but sales of 37.5 million or more in any 3 consecutive calendar months. The word is consecutive. When I talk of a quarter, do not look at January, February, March. Then you look at another quarter, April, May, June. It is consecutive. You're looking at January, February, March. If I do not qualify, I drop January, I go to the next 3 consecutive. Then I'll start from February, March, April. I do not qualify, I drop 1, I go to March, April, May. Consecutive. Okay? So it does not matter. You can even make the turnover of 37.5 in 1 month. So if you add a 0 in month 1, you add a 0 in month 2, and you add 40 million in month 3, you've exceeded the quarter threshold in 3 consecutive months. So it is not a must that the sales have to be distributed in all the 3 months. So if that person meets that threshold, then that person is eligible. However, you are only eligible if you're dealing in taxable supplies. Okay? If you have a petrol station and your sales are 1 billion in 3 months, you've exceeded the threshold of 150 million. But we know that fuel is exempt for VAT purposes. So for you, do not qualify, because what you're dealing in is not a taxable item. It is exempt. So we only determine the threshold using sales from taxable supplies. If you're dealing in both taxable and exempt, we put the exempt aside and we only consider the taxable supplies. That method is called the historical method. You're looking at transactions that have happened in the last 3 months. Then we have another method which we call futuristic. I can register anticipating to make sales in the next month. Assuming I sign a contract today, and I know by virtue of this contract I've signed, in the next 3 months, I will have exceeded 37.5. I already have the contract. There I can qualify to be VAT registered, basing on futuristic test. I am looking at the transactions which I'm going to do in the future. Okay, and I'm sure I will exceed the threshold of 37.5 in the next 3 months. Still, I can register. So any person can register basing on a futuristic and historical. We have other categories of persons who have to register, not necessarily considering the threshold. The likes of local governments. If at any one time a local government does business, they have to register. Whether they are collecting 1 shilling, all 5. For them it is not turnover based. But I think we shall discuss that probably another day. For now, we can concentrate on the turnover based for the people who are in the mainstream business. So if you ask yourself those 2 questions, do I qualify for registration using historical method or futuristic, then you can register for VAT. For VAT, I look at it in 2 ways. A person may already be having a TIN, and the person may be a fresh taxpayer that have just registered a company which doesn't even have a TIN. But at the same time, I have a contract where I'm supposed to supply goods and I will exceed the 37.5. There, the process of applying for TIN, you can add VAT as a tax type. Where you already have a TIN, you're going to go to the URA web portal, ura.go.ug, log into your account, go to amendment, registration, amendment. If you are an individual, you will go to individual. If you are a non-individual, you will go to non-individual when you already have a TIN. Go to the tab which has VAT. In that VAT schedule, you will be prompted to indicate the sales you have had in the previous 3 months and the one you anticipate to make in the next 3 months. The moment you fill in those details, you will have to submit the task. The task will come to URA to any officer who will handle it. So a registration involves many things. One, it may require inspection. That is this person really existing? The intention is not to register ghost companies, all individuals. I may say I am Jim, I'm trading. Kumbe, I do not have any business for whatever reason. So we can do an inspection, okay, to confirm whether this person actually has a place of abode, business, that if tomorrow we want to do some tax education with you, want to take you through the amendments, we actually know where to find you, okay? We confirm that if you're a company, the company is actually registered with URSP. If you have a business located in Kampala, you actually have a trading license with KCCA or any other local government. So the office of URA may actually come to do an interview. Depending, the interview can be done on phone. They can choose to come physically. So once you satisfy all those requirements, then they will approve and you will be on the VAT register. However, note should be taken that the Commissioner General also has powers to forcefully register a person in case that person fails to apply for registration. I'll give you an example. If you are in school and you know you have break from 10:30 to 11, and 11 you have to be back in class, you are obliged to be in class by 11. If you fail on your own, the teacher on duty can come with a stick and forcefully make you go to the class because you have failed on your obligation. So the same applies to the registration. As and when you qualify, please apply. Okay? But where you fail to apply and the commissioner has all the necessary information to believe that you should be on the register, he can forcefully put you on the register. So I do not want people to say, but you're saying I should apply. How come I am on the register but I've never applied? It is because you qualify, but you did not comply with your obligations. That's why they forcefully put you on the register. So don't be there and say, me, I've never applied, I've never logged on the URI web portal to apply for VAT, but I'm on the VAT register. It is very possible.
All right. Thank you for that. We have some questions. And someone is wondering why the VAT ledgers on the system keep changing month to month without our acknowledgement, without the taxpayer's acknowledgement.
Okay, let me start with the VAT ledgers. VAT will have a deadline for filing as well as a due date. Okay? The moment you're registered for taxes, okay, you have to file a return, assuming it is, today is 1st August. So we've closed the month of July. So the person has to file the return for July by 15th of August and actually pay. Now we have a scenario where a person may actually file a return, has a liability of 100 million, but does not pay. Interest will continue to accrue on the outstanding amount. Now, because interest is in the law, 2% per month compounded on any outstanding, they do not need the consent of the taxpayer to actually compute the interest. So the ledger will automatically run. That's why it will keep changing day by day to update the interest. But that only happens if you have an outstanding liability. If you do not have any outstanding liability, then the ledger is not going to change. Also, the ledger can change if there are assessments. Okay? Not necessarily what the taxpayer has filed in a return. URA normally conducts compliance reviews, the audits, the self-health reviews, the return examinations. Once they find that you have a transaction which you do not declare, they can raise an assessment. That assessment is additional tax. That additional tax will be on the ledger and it will make your ledger to keep changing. However, in case your ledger is changing, but for you, you feel you paid all your taxes, I request that you visit your nearest URA office. They look at their ledger. If you made a payment, there is a proof of the PRN. Okay? That in case it was missed here or there because of technology, that can easily be rectified.
All right. Thank you for that. Someone is asking, how can I get a TIN? They've called it TIN number, but how can they get a TIN?
How can I get a TIN? We have a TIN for individual, we have a TIN for non-individual. I'll start with an individual. Because of technology, we are no longer hustling. We are actually chilling with the technology. So if you are an individual and you want a TIN, all you need is your national identification number. You need a gadget which is connected with the internet. It can be a laptop, it can be an iPad, it can be a phone. Just visit the URA web portal, go to apply TIN for an individual. In there, okay, let me wait for the illustration here.
Save taxes.
So when you go to apply for a TIN, the non-individual, it is disabled, okay? Because this is an instant tin application. It is only available for individuals. For non-individuals, you have to use the other Excel template. Because here you have the unique identification number, which is the NIN. But for the company, it is not. So all you need is to put the national identification number, confirm the date of birth, which is on the national identification number. Okay? The moment you have those details, yes, perhaps you may have obtained my NIN, but you don't know my date of birth. Chances are high you may not succeed because the data has to tally with what NIRA has. So the moment you have those two, it will auto-populate the rest of the details. Your name, your gender, everything. All you need to do there is to select the marital status. Okay? Is to select the marital status. Okay. Then once that is done, the email is no longer mandatory. Because we know, yes, you have people in business who want a team, but perhaps they don't have an email. But at the same time, we know people have a phone number. So it is another compulsory field that must be populated. So the moment you put in the phone number, then you put in the rest of the details. Where do you reside? District, a parish, village. The moment you do that, you will submit. And you will get your TIN instantly in less than 5 minutes. That is for a non-individual. You do not have actually to come to URA. You can do it at the comfort of your home, in your bedroom, in your sitting room. As long as you have the NIN, you know your date of birth, and you have a gadget connected to internet. As fast as that. For the company, you have to go to the web portal and you have to download and use the Excel template. Yeah.
Okay, someone is wondering who is to pay the VAT in supermarkets or restaurants and in hotel payments. Jimmy Isari Barianango is asking.
Who is to pay VAT? Like I said, when you read the act, the word paying, I'm looking at the person who actually pays the tax to URA. But I'm hoping what he meant, I've gone to a hotel, I've gone to a supermarket. Am I supposed to be charged VAT on the food I eat, on the soda I drink from a hotel? If that hotel or a supermarket or a restaurant is registered for VAT and what they are offering you is standard rated, they will charge you VAT and that invoice will show you VAT. So you, the consumer, you are obliged to pay VAT to that hotel or to that restaurant. The restaurant will in turn file a return, pass on the VAT that you have paid to them to URA after deducting what they were also charged when they were getting that good.
Okay. Blessed Isaac is wondering how he can get the Excel sheet calculation that you used to illustrate.
The Excel sheet calculation, Isaac, if you're hearing, you can just drop me an email, jkagolo, jkagolo at ura.go.ug. I'll be glad to share that template with you. Alternatively, you can give me a call on 776-625205, and I see how to give you the Excel template.
Can you repeat the number?
The number is 0776 625205.
Okay. And then okay, that's make a child smile. Also is an NGO. Also, as an NGO, we have a challenge of paying every month, even when we don't get anything. I think you can make a comment.
They pay every month?
Yeah, we have a challenge of paying every month, even when we don't get anything.
By getting anything, I don't understand what they mean.
Yeah, maybe make a child smile. Maybe you can clarify on.
Probably when you say I don't get anything, because for you to pay, you must have made a taxable sale. Okay? Because now that our return is actually pre-filled, it is picking directly from IFRS. So for you to be in a payable position, you must have made sales in a given period. Now the issue of not getting anything is not what I'm understanding. Because if you're not selling anything, then you'll have nothing to pay at the end of the day. But probably if they can send another message and clarify on what they meant.
Yeah, because also the other thing I'm seeing, if it's an NGO, if you buy and you're not registered, then you are considered
A final consumer.
the final consumer.
Yes. Even a company can be a final consumer. If you're not VAT registered, you're a final consumer.
So Lutalo Kiguli is saying, hope we shall get to the registration of VAT. So maybe you can comment about the registration.
Yes, the moment there is registration, there is deregistration. But deregistration is equally detailed. I think we shall get another day to only discuss the registration for VAT, because it also has its own conditions. That, like we've seen that for registration, it is threshold based. So the same when we are deregistering you, you must have gone below a certain level of the threshold. So we shall get time and go through that, because it is equally detailed. You can't summarize it in 5 minutes.
All right. SSC Lake Echo, while calculating for the threshold, is the turnover VAT inclusive or is it net sales? And also, if I am a final consumer, or should I break it? Should we first take the first one?
Let me first take in the first one.
Okay.
When you're determining whether you meet the threshold or not, the sales are net of tax. If you have, by tax we are meaning VAT. So where you have your sales, you shouldn't include VAT to determine whether you qualify or not. Remember, VAT is not your money. You've collected it from me, but it's not your money. It is not part of your sales. You're collecting agent, you're passing it on. So when you're determining, you shouldn't include the VAT.
Okay.
Yes, the net sales in that. But net sales is not the profit, the actual net sales.
All right. And if I am a final consumer and make imports, how do I benefit from the import VAT, since I may not file returns?
If you are a final consumer, okay, like I said, the final consumer bears the burden. So if you are an importer, you're not VAT registered. You have paid it to URA and you're the final consumer. So you can't claim that input. You can only claim that input if you're VAT registered. The same way you will come to a supermarket, you buy bread, you pay VAT, but you can't claim VAT on that bread because you are the final consumer. So it is not only at importation, even when you buy locally, as long as you're the final consumer, you're not VAT registered. Or you're registered, but you're a final consumer, you cannot claim that. So it is at all ends, at importation and even when you're buying locally. So you're benefiting by paying tax to the government. We are developing Uganda together.
All right. So SSC Lake Echo is asking again, is there a fine and penalties in case it's a CG who forcefully registers me?
Yes, there are penalties for non-registration. Let me give an example. If a person was supposed to register, all the effective date is supposed to be 1st January 2024. A person either registers effective 1st August today, or the CG forcefully registers that person today. Okay? And we have to compute the tax you should have paid from 1st January to 31st July. You will pay that tax. But in addition to paying the principal tax, the penalty is double the tax. If the tax we are supposed to pay is 100 million, you will pay the 100 million. Definitely will come with interest because of the due dates for payment. But in addition, as a penalty for non-filing, rather non-registration, you will pay 200 million as the penalty. It is double the tax.
200 million is just a penalty.
Just the penalty.
100 million is the tax I should have paid.
The tax.
And then the interest.
And then interest. I'm just using 100 as an example. Probably
Yes.
for someone it may be a billion. Like I know like Echo is a big company, so it can be a billion. And if you didn't register, it will be double the tax.
Okay.
Yes, and what you should know that we are just an implementing agency. The laws that we are implementing are passed by our dear parliament, our legislators.
Elected?
Yes, the ones we elected. So, whereas it may look too punitive, but it is not the work of URA. URA's work is just to enforce what is written in the law. So, do not complain and say, but URA, we do not make the laws, we just enforce.
But I think you can also spread some little hope. In case, before CG forces me, and I have realized my sins after hearing you talk here, and I say I want to turn a new leaf and change. Is there a hope from the taxman?
Yes, there is hope. The law is there. Okay? When you do a self-declaration, what we call the voluntary disclosure, I've evaded the taxes of this much. And you come out before any compliance measure is taken against you. Do not wait for a URA officer to come and knock on your door and you say, before you enter, I have this to say. Okay? Do not wait for that time. Come out yourself, declare. The moment you do a voluntary disclosure, you will only be liable to pay the principal tax. The penalties, the interest, they will also be put aside. However, also in our amendments, the one for 2023 2024 and the one for 2024-2025, okay, under section 40 now E of the Tax Procedures Code Act, any person who has outstanding liabilities as at 30th June 2024. Okay? I'm now looking at the amendments for 2024-2025. Okay, I will start with the amendments that were in 2023-2024. Whoever had outstanding liabilities as at 30th June 2023 and you paid the principal amount by 31st December, the penalties and interest were automatically waived. Okay? Because there were challenges here and there, that amendment has since come back in 2024-2025. So if you have any outstanding liability by 30th June 2024 and you pay the principal amount by 31st December 2024, all the penalties and interest will automatically be waived. So that means now July is already gone. So you have 5 months within which to pay the principal. If you pay half, even it will be half of the principal and interest that will be waived. It will be on a pro rata basis. If you pay 100%, the entire interest and penalties will actually go away.
Okay. All of you who are hearing Jim's voice, go and sin no more. Come and let us work it out so that you can have a clean slate moving forward and you stop fearing the very kind taxmen who are bringing you these very nice solutions. So Ben Waka is asking about the recordings. URA TV, as we call it, is on YouTube predominantly, but these also show on LinkedIn, Facebook, on X, which is formerly Twitter. There's so much information you can find there, but YouTube should be the easiest because it's easier to track the videos and get to know the different topics. There are even others that have been had before this. There are even different speakers. In case today you've not understood how Jim explains VAT, you'll hear how another lady called Hafsa explains it. If English is not your best friend, there's Luganda. So far, there's also Runyachitara. So there's many avenues. But these recordings are predominantly available on YouTube. Then there's an anonymous attendee asking you to tell us about administrative expenses and non-creditable expenses in the VAT return.
Okay. Mr. Anonymous is a little advanced, but I'll respond. The first question is administrative expenses. When we talk of business expenses and more so administrative, we are looking at the things you use, not what you sell, assuming you have a shop, general merchandise. Okay, so when you buy the sugar and what, that is not administrative, it is actually what you buy in. But we are looking at electricity, rent, printing paper, and the rest, water. Those are what we call administrative expenses. As long as you have incurred that expense in furtherance of business, still you will be entitled to input tax. So in the example, remember when we say that you deduct what you already paid to URA. If Umeme gave you an invoice and you had VAT on electricity, it will form part of what you will deduct from what you have received. So all those administrative expenses, as long as it is incurred in the normal running of business, do not bring your electricity bill for home and include it in business. Do not bring your rent from wherever and include it in business. It should purely be for business, and URA will allow you input tax. It will reduce the tax you actually remit to URA. His next question was the uncreditable input tax. Input tax, not all input tax that you incur is creditable. I will make reference to section 28.5 of the Act as at 30th June 2024. I know they have made a rearrangement of the sections in the Act effective 1st July. So I am referring to section 28.5 of the old Act before the rearrangement. In that Act, we have input tax that we cannot claim. One is input tax incurred on purchase, repair, and maintenance of a passenger automobile. A passenger automobile is defined in that section 28.15 to mean a person solely designed to carry sitting persons. One will ask me, I have my Subaru, but it has a boot. Okay, so can I say it is designed to carry sitting persons and also carry some goods? The sole purpose of a Subaru is to carry passengers. Okay, so if I have a double cabin, that one is a dual purpose, it carries goods. If I have a Fuso, that one is not a passenger automobile. If I have a Coaster, that is purely passenger automobile. So if you are in a business and you buy a passenger automobile, you will be charged the VAT because it is a taxable supply. But you will not be allowed to claim that VAT because it is a passenger automobile. You will only be allowed to claim input tax on a passenger automobile if you're actually dealing in that business of buying and selling a passenger automobile. That if you have a car bond, your business is to sell cars, so you can't deny me input. So for you, you will be allowed. But if you have a shop here in Chikubo, I'm using Chikubo for, I hope they do not take offense. And you say, me, I have my Subaru, but I'm going to be using it to deliver the goods. But its design is to carry sitting persons. So for you, you cannot claim. But a person who has a Subaru in a bond and is selling it, for him, he will claim. Also, the other category of a person who can claim that input if you are in tour and travel. For you can claim input on a passenger automobile because you're using that very automobile to offer to deliver your service. That is category one. The other category is entertainment. If you have a company, you say, oh, my people have worked diligently this financial year or this calendar year. Let me take them to beach, okay, to relax. In the beach, they are going to take all sorts, all kinds of drinks. Okay, the green ones, water, food,
Just say drinks.
everything. Okay, so you will be charged VAT, but that is considered entertainment. Entertainment is defined to mean provision of food, tobacco, accommodation, and any sort of hospitality. So even that one, when you incur input on that, you cannot claim the input. Then you have 10% of telephone expenses. Yes, we know if Jojo you're given a company phone, perhaps you will spare some time, check on Mr. Whether a prospective, check on mommy, check on daddy. So that 10% tends more to non-business. So it is not allowed. You will claim the 90%, the 10% you will have to forego. Then in last year's amendment, we had additions that they added. If you subscribe to any social club, Kampala club, they've paid you to go to Kampala club to relax or chill with the big boys. Still, you cannot claim that input. Much as you've incurred, we recognize the fact that you've incurred it. But our lawmakers decided that it should not be claimed. But not claiming it in VAT does not mean it will not be an allowable deduction in income tax.
Okay. All right. So someone is asking, why is it that when URA is demanding the traders, they put interest, but when the trader is demanding URA, no interest is given to the trader?
Okay. You see, for VAT, like I said, for VAT, whereas you're the one paying this money to URA, but it's not your money. So imagine Jim came to your shop, bought a laptop, gave you VAT. You've spent with the VAT for 1 year. You're not paying. Why wouldn't you pay interest? Because it is equivalent to getting a loan. You've stayed with the money for 1 year. You've made profits out of it. But it is imposing, URA is imposing the interest because it is in the law. Okay? And even the law is clear on outstanding because you have overstayed with it. And that's why it is even compounded for VAT. Unlike for income tax, which is simple, because they know for income tax you're paying out of your profit. So for it, it is not anyone's money, it is your money. But this one is not your money. On the other issue that he said that if you are if they are demanding URA, there is no interest. I think that is not true. Still the law allows a person interest in case you have a refund and your refund has delayed with URA. URA is supposed to pay you with the interest still of 2% per month compounded. However, that delay should only be on the side of URA. If the delay is on your side, then you can't. If they ask for records and you do not provide the records, do not demand for interest. Okay? And if URA finds that in your refund claim, anything above 50,000, it was claimed wrongly, then that means that URA has to do more work to actually ascertain the actual refund position. So you also forget about interest. But if what you're claiming is true to the best of your knowledge, it is provided for in the law.
All right. How do I get VAT withholding tax certificate from the portal?
Okay, from the portal, I don't know if you can go there. You on tax incentives. Okay. Here there is withholding tax exemption list. Okay. Withholding tax exemption list. And this is not only to the person who is actually exempted, even you who is not exempt, okay, but you want to find out whether the person is actually exempt or not, you will come here and check. Okay. You will put there the tin. I've already picked the tin which is there, the very first taxpayer that was up. It will show you VAT withholding, yes, for this period. Okay. So you can come here and download the exemption certificate for that period, because the exemption is a period. You will not get for 5 years in one. Each year is taken as a period. Okay. So you come to download the certificate and you will have it. As long as you have a tin, you can at any one time check whether a person is VAT registered withholding exempt or not. And that tin will show you VAT withholding and income tax where applicable. If a person is only exempt for VAT, it will have VAT. If it's only exempt for income tax, it will be income tax. So all you need is a tin, a gadget with the internet, you will be sorted.
Okay. So we are way past time.
Okay.
I'll just maybe Bless Isaac has also sent his email. Maybe I'll share it with you.
Okay.
And you can send them the thing. The rest, I don't know. I think we should just, for deemed VAT deemed transactions, that I think calls for another.
We can prepare another day for
session.
that. It is equally extensive.
Yes. So let me just read the rest that ones I think you can handle here, and you handle them at once and we close.
Okay.
The big challenge with VAT is that it makes the final product very expensive, because the argument is that once the importer is charged VAT, that should be enough, since no more value is added after that. I think we discussed this, how the value addition
That
comes
one is
through.
already illustrated.
Yes. Then regarding car import taxation, why don't we use the actual price or CIF of the car to calculate the tax? Also, is it possible to pay the taxes slowly? Can I use the car then get full possession after completing taxes? Then URA closed our business premises and confiscated our merchandise without a court order, but continued sending us messages of tax demands, yet the business isn't existent. Another one, there are products where we really add small margins between the purchase price and the selling price. For example, you import a product at 10,000 after taxation and you add 1,000 as your margin with taxes. Don't you think you double tax the product when you take VAT against my selling price? Again, this was addressed.
It is addressed.
Everyone keeps
the mechanism,
the output input, so it's not double taxation, just getting a portion at each stage. Then can an individual claim for withholding tax on imports if not registered as a VAT paid, or someone if they are not registered for VAT? So with those, okay, you can also.
Let me start with the last one. Can an individual claim withholding tax on imports even when he is not VAT registered? Withholding tax is not VAT. It is actually income tax. Okay, so you can claim that withholding tax in income tax even when you're not VAT registered. The one who says that the business was actually closed, but URA still demands. The question is, the tax they are demanding is for which period? Chances are high they are demanding a tax for the period when you are still in business. So as long as you are in business and that tax is due, it will continue to be due even when you have ceased to be in business. Like getting a loan from the bank, even when the business closes, they will demand. Okay. The one who said, I will not comment on the CIF for the car because I think it will be
Customs.
at customs and you have something like in court. But paying in installments, yes, you can import a car right to the commissioner customs. They allow you to pay in installments as you enjoy your car on the road.
All right, so I think you can also give us your parting shots as we prepare to close.
Okay, thank you so much, moderator. My parting shots is I want to tell our dear listeners, the viewers, the taxpayers, paying tax is our constitutional mandate. I'm one of the people who pay tax, whereas I collect for myself as well. So when we pay tax, we shall achieve more. And before we demand for whatever you have done, let's first honor our obligation. And I encourage each and everyone to honor their tax obligations. Those who have arrears, please pay and benefit from the tax waiver incentive that we have. And it is elapsing on 31st December 2024. So make sure before we go in 2025, you start on a clean slate. It will be a saving on you if you don't have to pay the interest and the penalties. Otherwise, thank you so much for listening in. Those who have sent in questions, hopefully we have responded to those questions. But just in case you have any question, you can post it on our channels. We shall give you feedback.
Yes, thank you so much for sparing the time to share with us for the illustrations. His contacts are still visible on the screen. You can send him an email or phone call, but just to be safe, you can also use the toll-free lines because there you're guaranteed. Because you see, while he's here with us, he's not able to answer that phone. But someone is dedicated waiting to answer those calls that are made to our toll-free number, or someone is also waiting on our WhatsApp number to answer you, or when you text us. But those are faster. Those, at least we are guaranteed that there's someone who's sitting at those lines or on the phone waiting to respond from morning basically to night. I think they close at 11. Surely at 11, most of the questions are answered from 7 to 11 p.m. So thank you so much for joining us. Thank you for the questions. Please go to our various social media channels so that you can keep getting some of this information, some of this content. Some of the questions you're asking have already been answered. So you can also rewatch this session. But thank you so much for joining us and be blessed.
Uganda is rich in natural resources and hard-working people. But to turn these resources into real progress and development, we need to invest in our infrastructure, education, and healthcare. That's where taxes come in. When we pay our taxes, we are investing in our country's future. We are supporting the schools that educate our children, the hospitals that care for our families, and the roads and bridges that connect our communities. And when businesses pay their taxes, they are contributing to the growth and development of Uganda's economy. They are helping to build a stronger, more prosperous nation for us all. So when you pay your taxes, you are investing in the future of Uganda and supporting the progress and development of our nation. Uganda is because of you.
Uganda Revenue Authority, developing Uganda together.